So if you're the millennial and you've got a little bit of extra cash because of stimulus and things like that, the flight to safety does make sense, right? They're not looking at the bonds and the golds and things like that because that was their grandfather's flight to safety. Who cares about that stuff? I'm using my Netflix every day. That's way more valuable to me than a shiny piece of gold.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl. Why trade alone when you can access over 100 years of trading experience right at your fingertips? Simple strategies, proven tools, real-time alerts, and an interactive trading community await. Keep it simpler with Simpler Trading by visiting their website at simplertrading.com and check it out with a $7 trial today. That's at simplertrading.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today I have a special guest online, Jack Roberts. Jack recently got a promotion. He's the Director of Options Strategies and Micro Futures down in Austin at Simpler Trading. Jack, I am so excited to have you on today. We've got a lot to talk about.
Oh, yes, we do.
All right, Zach. So before we get into it, give the podcast a little bit of background on who you are and what you do over at Simpler Trading, and then we'll get started.
Right. So I've been trading for more than 10 years now, and I really started out whenever I was a kid under my grandfather as my mentor. But over time, going through college, getting a degree in psychology and just kind of understanding market psychology in general, I just really fell in love with options. And so, there's a lot of really cool creative strategies that we use and things that just intuitively love about financial markets. So just really gravitated towards that. So really just my thing is educating people on things that are coming down the pipeline in the future. I tend to have a more futuristic kind of point of view based on a statistical analysis framework. So just kind of like, mitigating risk as best as possible and defining risk and all the things that a successful options trader needs to do. And it's the ride of a lifetime right now. 2020 has been nothing but spectacular. It's really crazy.
Oh, without a doubt. And I'm excited to hear what you've got on your mind because we started talking beforehand. Jack's like, no, let's save it for the show. Let's do this. So, all right, Jack. So we're going to talk about how to find some of the best names to buy going into this quarter. And Jack was like, boy, I got something for you. So lay it on me there, Jack.
Yeah, so 2020 is earlier I was like, oh, this is a spectacular year. And what I mean by that is we have a different flight to safety. Flight to safety used to mean, bonds or, in the past it's been gold and silver, which I'm not denoting right now. I mean, you have a nice run in silver. Gold is what now, 1800, something like that. So it's just continuing to slowly grind higher. And whenever you have things that are usually tied very, very neatly and cleanly, like equities and bonds, and whenever those correlations start to loosen up, things get a little bit interesting. And so what we've seen right now is actually a huge move in all the FANG stocks, right? So Facebook, Amazon, Netflix, and Google. And they've all just had a meteoric rise, not to mention Tesla having swings that overvalue and outvalue the complete market cap of Toyota and other car companies. This was yesterday. So whenever I talk about flight to safety, there really is no flight to safety unless it's a FANG stock, which is unprecedented for you to even hear that somebody on the other end of the microphone is saying, hey, there's 4 or 5 equities in the markets that are actually safer than bonds. They're safer than other currencies. And we're starting to see a breakdown of what seems to be, market favoritism, where you've got other names that have really been powerful for the past 5 or 6 years, and everything's going to have to, your success, the company's success now is dictated on how you're able to transform around these major companies that have trillion-dollar valuations and that have meteoric rises. You could go into the whole, debt buybacks and stock buybacks, and even the government now is buying, Apple bonds, and I'm probably crushing that a little bit, but the fact is the flight to safety is 4 or 5 equities, and they just continue to rise. So with all that said, you finally get to the question of, okay, well, what else is there to buy? And then if you follow Danielle Shea at Simpler, one of my colleagues, she has a really cool COVID-19 list, right? And I know that sounds kind of weird, but at the same time, it makes complete sense, because you've had things like Zoom, you've had things like Netflix, you've had other names that are actually benefiting from this entire 2020 mosh pit of insanity. And what you have now is a lot of short covering. So not only do you have the flight to safety to these bigger names, but then you have a lot of extra, what I call like, peripheral large sacks of money going into another thing that's flight to safety, which is things that'll benefit for a quarantine, Zoom, the whole list. And there's a huge list of these names, and those tend to be the ones that all the funds are gravitating towards.
Okay, so I was just going to ask you.
That's one side of the coin.
All right, so let me ask you this. Now, for example, Robinhood added about 3 million accounts in the last, I don't know, let's call it 120, 150 days, right? And then everybody's getting their stimulus checks. And then on top of that, people who, based on their situation, are getting higher income from the unemployment, like extra bonus, than they were actually working, right? So now they're making more money not working. That's a fear of mine, because who knows where that's going to lead. But do you think that a lot of this is driven in that way, right? Do you think that there's all these newer investors coming into the market and they're seeing this, and it becomes a self-fulfilling prophecy? Tesla's going up. Oh, I'm going to buy more Tesla, so Tesla keeps going up. Do you think that has anything to play with it?
Oh, no doubt. And that's kind of that other side of the coin that I wanted to discuss with you, is like you have this flooding of 20 million new subs for Robinhood, something like that.
Well, they started the year around 10 million, and right now they're pushing around 13 or 14 million. And that's just happened since the beginning of 2020.
And what's funny about that number is anything over 5 million is huge. Okay.
Oh, yeah.
So,
these are huge numbers.
Yeah, it's huge. And so the question is like, okay, is all that affecting the derivatives market? Absolutely. You've got new traders flooding in, which I honestly, and I'm a good-hearted person, I really feel for new traders jumping into this market right now, especially those that want to be right all the time, calling the top. There is no top just yet, okay? But to address your question, Chris, there's a lot of different types of folks, like teachers, that are getting paid to stay home, and they're probably pretty happy about that. There's a lot of people out there that probably were working their ass off, and now they're just kind of getting a nice break. There's those people. Then there's those people that are actually staying home, and they're like, okay, reconfiguring their life, and they're getting into trading. Okay. And there's two different people where that's going to be, one is kind of stagnant. They're going to sit this thing out. They're going to get their check. And I actually don't even want to go into the details about that, because who knows what's coming down the pipeline. The other side, okay, you've got your traders, you got an influx of a lot of just that extra liquidity. And then, of course, you have the Fed printing money. It's not deflationary at all. We're coming into my idea that we think we just took the hit. We think the hit just came, the quarantine. What we're experiencing, and this is like my theory that I've thought of, and it's just straight from my mouth, and I've had a lot of time to think about this, and I spend a lot of time talking to other clients about my perspective. And so here it is. What we've just experienced is an acceleration that was bound to happen, whether that was this year or 5 or 10 years from now. And what we've had is an experience where things have changed forever in our lifetime. This is something that the only person I've heard say this is Tom Sosnoff. But I think I had said something in a different podcast, and maybe I know I was here probably last year, something like that, where I was expecting a big change, and it It could have been COVID-19, it could have been something else, but whatever it is, it was bound to happen. Okay, so what we're experiencing is acceleration of something that was bound to happen. And now we're adjusting to it. But the thing is, the market doesn't care. The market keeps going up. Okay, it gets bought up. And so this is interesting. And the point is we have adapted. You've had a slew of companies either breaking down, going bankrupt. I mean, Neiman Marcus, Brooks Brothers, other names that you'll hear about that are just going to be ghost towns here fairly soon. What we're experiencing now is the acceleration of the pivot. And the companies that will survive are the ones that can pivot around Amazon. That's why eBay is doing so well. eBay's pivoted to the shipping. They've done well throughout the quarantine, and there's other things coming up through the pipeline, like paying with digital currencies. Okay? Digital assets are going to be, and I don't have a timeline on this, unfortunately, digital assets are going to be a fleet of safety once people realize that there's not going to be a security breach in your bank account. Okay, the blockchain is safe. Okay, and people are really slow to get to this. People don't understand. It's just a cryptographic ledger, keeping everything safe. The internet itself wasn't made for safety or security. It was made for transactional and communication, right? Well, now we've got something else where you've got the digital asset market just sitting there waiting, primed to go. And whenever those Bitcoin futures let go of those short contracts, you're going to see another meteoric rise in things that are safe. And so the reason that I talk about this with so much energy is because not only have I been talking about this for 3 or 4 years, I was saying that there's going to be some type of catalyst. It could be biological. It could be the Fed flipping the switch, which they kind of are in a passive aggressive way by just printing more money, which is completely inflationary. And so what we're coming into is what I heard was like walking through the dark alley, the guy pats you on the back of the shoulder and gets your attention. That scares the crap out of you, but yet that's not even the scary thing. It's the bat in his hand that he's going to whack you with. And I think we're about to see the hard thing, and the hard thing is evictions, the messy social unrest from commercial real estate crash. You have a non-forgiven school loan debt, which is a product of the 60s, 70s, and 80s and 90s, the expensive college. There is no savings, okay? And this is all big government. This is why we need a free capitalist market. This is why we need to deregulate and really become a little bit less strict with all this stuff. And I know that's off topic, but it's just to shed light on, this is just the tap on the shoulder before the bat comes and swoops everyone up. And I hope, it's maybe it's naive of me, but I like to consider myself an older kind of spirited millennial, is I hope that everyone, baby boomers and on, that their savings and their all their funds actually still remain safe, even though the dollar could lose value like 20 or 30%.
Oh, Jack, I don't like it, man. You're bringing the doomsday to the podcast. I don't want that.
It's a lot, man. It's a lot.
I don't want
that.
It's but I've had a lot of these thoughts too, and I've talked to a few other guests about this topic, and my number one concern right now is commercial real estate, because you've trained everybody in the country and a lot of the world too, I imagine, that they can work from home, be totally proficient, and get all of their work done in a manner that continues to keep them gainfully employed. But then let's say you were a company where you had room for 500 people. Now, maybe only 20 of those need to physically be in the office for anything. You don't need the space for 500 people. So now you're going to be listing that, and let's say it was an asset you purchased for $2 million for that office space. No one's going to buy it because nobody else needs the 500 people space either. So you're trying to downsize. Everyone else is trying to downsize because all their workers are at home now, being productive in that way. And I could absolutely, like you're talking about, see the commercial real estate collapse. Because what's the point of skyscraper buildings when they're empty, right? It's going to look like Detroit everywhere. Your thoughts?
Yeah, no, it's absolutely on point. I mean, there's really not much to add to that. Just that the obvious things are you're either going to pivot successfully remotely, which we clearly have. Tastyworks clearly has. Most companies have. It was actually, that was one of the switches that everyone had to flip. And if you didn't, and it's a success story, and it's a success story inside a giant failing system. which is interesting because there was no training for this. Everyone was like, hey, well, now I got to stream from home. Okay, end of story, get your stuff done, right?
Mm-hmm.
So, yeah, I mean, the commercial real estate bust is just, I'm staring at it. There's a philosopher, educator that died too early. His name was Terence McKenna, one of my favorite kind of like spiritual guru guys. And he talks about, the metaphor of being on top of a hill and looking at the sun and knowing exactly where it's going to rise, and just being able to look into the future, and just kind of state the obvious early. And that's what I'm doing. I hope that more people in my line of work can do that. It's just one of the things that I love doing. The other thing about the real estate markets that you're talking about, there's a winner and there's a loser. The winner is going to be the single family home that's roughly around 200K to 300K. You can rent those out. You can, there's 2 or 3 bedrooms. That can be office space. I like to think of like the old Silicon Valley framework, where like, the business started in the garage. And so single family homes are going to survive and they're going to be fine. Commercial real estate, like you were talking about, it's on shaky water. Malls are going to turn into, either giant hospitals or something that is, who knows, could you imagine what a mall it actually turns into?
Right.
But that's not it. I mean, you have downtown Houston, you've got downtown Austin, you've got a lot in Dallas that was already pretty empty, whether for slowing down reasons, but now it's accelerated. There's that accelerated word again, where we're staring at so many things that are really, really negative. And, it's kind of supports the argument for this really wild, thrust of liquidity into these top names that are actually holding the stock market up. It's a really wild situation, Chris.
Oh yeah, I completely agree. So to bring this back around to like stocks and investments and things like that, where do you feel is a good place to go, right? So to me, when I see like I wouldn't call it flight to safety at this point. I would call it everybody's piling on and getting ready for the bubble to burst, like Bitcoin did, right? Where are you putting your money? Are you holding it? Are you dabbling in a couple things, dipping your toe in, or are you going to cash, saying, you know what, things are going to get messy, I would just rather wait before they get messy?
Right. And I think you need to hear, you would think that I would have some type of bias being in this industry. And, I have a small shaky bias just because that is true. But really, it's 3 main things. It's Texas real estate close to water. Okay. So you can get many, 5K, 10K lots that are close to smaller cities that are still developing. Texas is going to have, that's one thing we're probably not going to get around to it today, but Texas is going to have a boom. There's going to be a Texas exodus. There's going to be a huge mass of people coming to Texas, and there's so many reasons for that. But me personally, silver, gold, already started that a long time ago. I used to travel around the world, and I bought most of my gold in Dubai just because it was cheaper. The other thing is, as far as options go, I've got long-term bearish hedges. I have a fund where I'm just basically dabbled in mainly the FANG stocks. That's probably not a bad idea for the next 4 to 6 month outlook. I think the market just continues to make higher highs until that sentiment is exhausted. And then, surprise, surprise, I'm a millennial. So actually I've got, of course, a ton of just digital assets, and I'm mainly focusing actually not on Bitcoin at all, but mainly things like that are just favorable in my perspective. So XRP, Ripple.com. Very impressive system there, which is totally against the grain. A lot of your listeners were probably just like, okay, I'm going to turn it off now. This guy is like buying XRP. It's the most hated in the zeitgeist, but it is what it is. And so other coins like that, in my eyes, see nothing but growth and maximum potential. we're talking about, email before it was email. This is the same thing. It's, it's got a 15 to 20 year curve. We're already about 10 to 15 years into it. So, I want to be there early and see how it goes. But I mean, flight to safety is no longer bonds anymore. It's no longer the mass amount of equities. It's no longer a lot of things. And
well, I was just going to say that kind of makes sense, right? So if you're the millennial and you've got a little bit of extra cash because of stimulus and things like that, the flight to safety does make sense, right? They're not looking at the bonds and the golds and things like that because that was their grandfather's flight to safety. Who cares about that stuff? I'm using my Netflix every day. That's way more valuable to me than a shiny piece of gold. So I get it now. All right, man, you've convinced me. I get it. I'm going to go buy some right now. It's on sale. I just heard that their earnings pushed it way down, so I got to go get some.
Hey, man, I'm a nonstop shop. I'll sell you mine. Yeah, I'll sell you mine right now.
Perfect. We'll cut a deal after this.
Let's do it.
I've written a short guide on how you can use the triple stock profit system. It's the secret weapon every investor needs right now to change your financial future. And you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter.
So Jack, tell me, where can people learn more about you and Simpler Trading and what you do over there?
Yeah, so I love educating people, especially new traders. You can tweet me at I am Jack Roberts, super easy. Usually on Twitter, just catching up with things throughout the day. So I am Jack Roberts, and then same thing for Instagram too as well. And then just go to simplertrading.com /traders, and you'll see me somewhere on the page. It's a wild ride, and I love going back and forth with other traders, and just kind of seeing what the narrative is around this crazy market. I'm super excited about it.
Absolutely. Well, this has been a fun conversation, Jack. I really appreciate your time.
Yeah, thanks for having me. Next time, let's go longer. What do you say?
Hey, I like it. You and I both got things to do in the next couple minutes, so I'm going to wrap it up here, man.
Awesome, man. We'll see you soon.
All right, talk later. And thank you guys for tuning in to today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss when we have people just like Jack and more tools, tips, and tricks to help you trade faster and trade smarter. And I'll see you on the next episode.